Hi, Matt McAleer, Cumberland Advisors, January 3rd. I'm with the Moose, our Chief Investment Officer. Happy New Year. We're going to keep this fairly tight this week. You know, it was one of those weeks, tough to get a lot out of it. Shortened week, abbreviated. Volume kind of come and go. One thing in terms of equities, before we jump over to John, you know, this move off of those November highs, this little pullback, in my mind, it has set us up for some interesting entries. And we can talk about some areas that look good in a moment. But John, how about in bonds? What did we see?
Week where it just kind of creeped a little bit down in yields. Look at the 10-year bond, basically at a 460, down a couple of bips for the week. Offsetting last week, which was up 8 or 9 ticks for the week. Really nothing going on. Same thing true in munis, although next week you'll start to see a municipal calendar build up. And just at the right time, because January 1st this week is the biggest rollover date of the year with maturing bonds, called bonds, coupon payments. So there should be a pretty good muni market going forward. One thing, you know, you get out of the doldrums of the last 2 weeks, so there's little economic data. And next week we're back to the grind. We're going to have the unemployment report. We're going to have the employment report on Friday. Initial jobs claims earlier in the week, the JOLTS report. It's kind of back to business as usual. However, if you think about it, there you were back in September with a 370 on the 10-year bond, and we've talked about this before. This rise in rates really built on the expectations of a Trump presidency, and we know basically Congress and Senate on the same side. And yet the inflation numbers are really not much higher. So the real rates on bonds are high and attractive, and we'll see how we do going forward.
Yeah, certainly that cash flow is a compounding piece of anybody's portfolio.
Absolutely, and that's, you know, one of the things which the market this year enjoyed, which it didn't have in 23.
Yeah. And over on equities, again, some back and forth. Santa Claus rally didn't really take place. Remember, it's the last 5 trading days of December, first 2 in January. So it ends today with a nice solid day, but a little bit soft. A lot of people may make something look into that somehow. I think an awful lot of that December move may have been stolen by that rip in November.
Right.
You know, you had such demand for equities straight across the board. You got some speculative readings in a lot of options areas. December was some backing and filling. As a matter of fact, if you go back to last Friday's video, outside of tech and large cap growth, it was a very soggy December.
Yeah, soggy, and, you know, we had all that ebullience after the election. And yet, you know, going into, you know, this week, the equity markets were actually lower than they were the day after the election.
Yeah. So it's back and forth. What's starting to work? What do we own? What are we looking to add to? You know, we had a nice solid year out of industrials last year. They got a little soft in December, down 5-6%. I didn't like that. It hurt our performance the last month of the year. We've seen demand come back into industrials the last couple of days, specifically some of those industrials tied to that grid. Remember, 8-9 months ago, we were talking an awful lot about the build out of the grid to support the utilities that must support the energy needed for AI and a growing economy. So with possible strength in terms of the economic outlook in the U.S. with the new administration,
right?
Maybe less regulation, you know, tough to say. We don't like to look too far behind our headlights. It's nice to see a bid there. We may go back to additional pieces within industrials. We did try to buy a little growth today. Just today, this morning, we got a little cute. It ran away from us, not too far. We'll get back to work on that next week. Those were 2 names in a couple of our strategies that have performed well. SPY-G, which is the growth area of the S&P 500, and VUG, V-U-G, Vanguard's growth index, which has been kind of an old standby for us. So anyway, the year is off. Let's get off to a good start. I like to hit hard in January, get ourselves moving, take a look at where we're at, and adjust going forward. Enjoy the weekend. We hope to see you every Friday in 2025.